Hey everybody, DayTraderRockStar here, and a little market radar going into the second part of the week. This is going to be, actually tomorrow is going to be 420, right? 420, April 20th. So a little market radar for that. Also a little look back at what's going on this week. I like to call it a roadmap. You know, we look back, we show you the potential setups that were in the market. If you took them, but this is each day, when we broadcast the markets, I tend to mark out the levels we pay attention to. These are called high probability setups in the market. And even though the markets have been going sideways, slightly down, but mostly sideways and choppy for the last, a couple of weeks at least, it just has been one of those, definitely not a trending market other than to take a look at today. But you can see, just looking back here, going back all the way to March 27 when we pulled back, we tried to get out of this channel, popped of it a couple of times, and then kind of drifted back, and now made us a secondary channel, tried to pop out of that. It's been going sideways here 4 days now, and actually we could continue to go back and take a look at, all the way back to the 27th. So almost for the last month we've been in this range, and you can even go back even further than that and see that we're not that far off the highs. But we're definitely waiting on something. There's no big catalyst here to break us out and take us to new highs. We'll see what happens down the road. There's a lot of, and again, if you've been following the markets or are interested on what's the cause of this, there's some blame on geopolitical events. Of course, we have the French elections. We have the Great Britain with the snap elections being announced. And then there's, of course, the North Korean situation, which is playing out as we speak. So this has kind of put the market in kind of a stalling pattern, and it seemed, and not even to mention the administration in the first 100 days and talking about how we couldn't get healthcare reform figured out, and now they're kind of pushing this out that it's going to be the same old story with tax reform. So there was a new study out today, a new survey, and that less people thought that we could get the tax reform out actually before 2018. So, it's not pushing the market down too much. It's not a drastic sell-off. It's just there's not many opportunities. If you see this going sideways, you could be in something for a couple of days now and not just getting any upside, even though the setups are there. So that's why today we're going to talk about intraday setups and how you can take advantage of the market. And that's what we do. Follow the markets intraday on a very tight and very small time frame. In this case, we're normally looking at the markets during the day on a 1 minute time frame, but then we can also look at it on the 5 minute and the 60, and just kind of rotate. But most of the time, the default is the 1 minute time frame, and this is a very effective time frame for scalpers because the setups we look at, and again, get into the habit of calling them high probability setups because there's only a few of them. And that's what keeps you out of trouble in the market and keeps, this is a business. And I always talk about this in my videos that you got to trade, you got to treat this job, your trading as a job and as a business. And, you should have a business plan. You should understand why you're trading, what you're trading. And, there's a reason why you're getting in, a reason why you're getting out. And contingencies plans if things don't work out, but everything should always be planned for you. This is a business. This is not cowboys and Indians each day going into the markets and shooting it out. It's very easy to have patience in this market and see the setups that we identify, or at least put out there. That's part of the process, the education of knowing what works best in the markets. The second part of it is building confidence and building some other of the important skill sets that you need to be a successful trader. You have to control your fear. You have to be disciplined enough to take profits off the table, especially if you're using a time frame that represents a very choppy time frame. It could give you a high probability chance of getting that pop, but it also was a short time frame, so it could actually come back and it would work out, but unless you're thinking of that time frame. So lots of people, might be working steady jobs and you just want to get the high probability setups, which are swing trades, and you want to get into a trade that lasts maybe 5-10 days, versus you want to get into the market and you're sitting in front of your computer and you're saying, all right, here's a divergence, I want to go short here. I have a tradeometer set up, I want to go long here. Different ways to approach the market. So this part of the video, because the market's been going sideways, there has been a great deal of great setups that that show up each day. And again, I could classify these. Are called playbook plays. I try to put most of them up on the forum, on the dashboard, on the members section of the site, and that basically we go over the setup, how you recognize it, and how you trade it. But I'm going to go over some of them right now. So we're just going to go back to the beginning of the week and just go by minute by minute and just show you what the market did and see if we could recognize any tradable spots, and if we did trade in these areas, why we did and how it worked out. Let me get some ice for my Coca-Cola. And then, actually we're going to do a cocktails and candlestick show tonight about 8:30, so that's about an hour. So I have to still I have to get some takeout sushi or something here soon. But I want to really go over this because this is some good stuff. This is, again, when you get that mindset where you're treating trading as a business, and you go in there and you get organized, and you have the confidence and the discipline to do this. You will get bad beats every so often. You will get the market here maybe being affected on news. And I talked today a lot about how the new market these days are being more and more manipulated by program trading. And you could be coming to a certain area, and all of a sudden a blast of volume comes in and it drops us and it triggers. So it's it is becoming harder. But those levels also set us up on some good, they sometimes give us those signals we need. So it's all about just taking the right setups, and this is what we're going to define for you today. So let me get my ice here. All right, let's see what we can do here. Got my ice. Now I'm not starting the cocktails and candlesticks yet. Rum and Coca-Cola. All right, so I got my stuff here. Yeah, that's good. A little Coca-Cola action here. So I got some good stuff for you tonight. So again, we're going to take a little trip back here. This started on Monday. See, the market opened up. There's a couple techniques. I'm just going to walk through this. We kind of put the market on fast forward and just kind of go through these setups, and I'll just describe them, what the setup is, and what the typical trade off of that setup is. All right, so the market opens up at 9:30. We got a kind of little a lot of volume coming in the morning, and sometimes that's when we get our biggest pushes and reverses. So really in that first half hour to hour, you could get a nice little drive. In this case, you drove up here, and from that point on, we started seeing that the tradeometer and the Rambot started taking some signals here. And the tradeometer is a standalone order entry indicator, represents multiple time frames. And the Rambot is a divergence indicator that identifies a divergence on multiple time frames. One is on the dashboard, the other one is the tradeometer.com. So the orange ones, or the yellow ones I should say, are Rambot signals, and the blue ones are tradeometer signals. So we actually started to see the market here come back down a little, and we started to form what we call a 1-2-3 pattern, when we have two pivots on one side and a pivot on the bottom. This is right on the 200 period moving average. Push up here. And then we actually dropped down here. And this was a sell program that hit the market. I remember, seeing some alerts coming through. And that's what happens. Sometimes we get a nice setup. You could actually see the market push higher. And the market here, there's a big spike in volume. It drives us down, and we move right back up to that level. We talked about that level being a program selling area, and lots of times we'll return to the scene of the crime. And that's exactly what happened. We came right up to that level where we did, and we actually started chopping around that level. So it's just a textbook type of an example. Having to deal with that becomes a little bit more difficult sometimes, because you don't know if that is a news event or is a program selling. There is some good products out there that can help you with the dark pools and some of the algorithms, and I'll talk more about that in the future. So we waited for this to kind of chop around, and during the time I'm also looking at different stocks and stuff, so I'm not focused always 100% on the setups. But these little, when we look back at it, we could actually start to identify some of the areas. Here was our looked like a nice little divergence setting up, but in this case, you could actually see the market kind of continue to grind higher off of this divergence, and that was a good one. It was right at 1 o'clock, but there was some strength here, and this is key for us, because I always say our 1, 2, 3 go-to trades. Of course, the lane divergence, which is a pure lane divergence, as taught here. When I use that 80 line and that 20 line as our reference point of being higher and lower versus the price, it's very important. And then we have what we call a triple stochastic setup, and we use that with a flag setup. We call the triple stochastic flag. It could be a bear flag or bull flag. And then we have triple stochastic just rotation, which is a multiple time frame bounce. But those two, I would say, the divergence setup and the triple stochastic flag are very important. Then from that point on, we have trend lines. But it really does come down to mostly on these divergences. I've got myself down to a really good system now, where we only pay attention to certain setups, the ones that always show up and always work out. Now, look at this. Here we have that divergence, and we're just talking about always working out, but we see this going back up. Now, there's something I stress. This is important. This is what I want to get to. You might say that this divergence broke higher and didn't really work out. It did move a little bit higher, eventually moved down lower than the signal. But the key is watching the triple stochastics along with those divergences. There's one signal that trumps, and I like to use that trumps the divergence, and that is if we have a trending market, which can be identified by a triple stochastic flag setup. Now, a triple stochastic flag setup, we're going to simplify this for you. All right, I'll start this video back up here. What I did is I just started the show up, and I'm just going over the show. So I'm doing a video now in the show, just catching up. We just talked about this divergence setup, and how even though it's the number one setup, there's one thing that goes against it, and that is having that triple stochastic flag setup. So just to identify what that means, and I changed the stochastic settings here a little. Remember there was a band here, and you definitely could see the band divided between the K and percentage D line. I find that sometimes to be confusing. I like to have just my percentage D line showing as a signal line, and I use that. So in this case, you could see how we're above that 80 line. It's not choppy or anything. It's really direct. But this technique here works when the 60 period here, the slow, we call it fast, medium, and slow. And then we have a 9-3 down here. But we have the divergence, all right? So the divergence, we're waiting for that to pull back. It's not really pulling back, but we're seeing the stochastics here rotate back down. And we finally get right at this point, right when it tags that 20 line, we look at this and we say, well, we have a fast rotation on the fast, and we have an embedded stochastic on the full. And that is usually a bullish indicator. We usually use this as a bull flag indicator. A rotation, if this hits 80, if this hits 20, this stays above 80, and the price holds around the 20 period moving average, we tend to move up off of that. Now, we did do that. Now, again, 1 minute time frame just represents this thing is going to rotate back up, maybe a 1 minute time frame, and then try to get back into a rhythm. So these are very micro moves. But, the micro move could be a 2-point move in a volatile market. And we're talking, a couple ticks is it's finding a $20 bill on the ground. If you could trade, understand the setups here just a little bit cleaner and get yourself out of trouble by identifying a stronger pattern underneath it, then you're golden. So that was a setup, and we continue on Monday, and you can see Monday afternoon here just kind of cruising on. And again, these are the blue in the circle I post. Usually I post these close to real time. I mean, you really do need the tradometer to get the true signals, but that's a tradometer sell signal. It's also a divergence setup here, so it's a combination. It's what we call a super signal. It's a divergence, the higher low, the lower low, both on the 9-3. And then a kind of a pullback here, So we broke back down, we flagged out a little, continued to move right back down. Just a good divergence. It was a perfect divergence. We got a multiple time frame signal back over here, starting to line up, and it chopped around, eventually moved up. This is really our no trade zone. I would say to be realistic, 3:30 on. Similar to the early first half an hour of the trade. Lots of times you'll get, order imbalances. You'll get some funky stuff going on. So you just try to keep yourself in a stable, controlled environment, and versus getting into a shootout at the end of the day. So then the overnight trade comes. We're not paying attention to the overnight, but the tradometer does pay attention to the overnight. And you will find setups. I'm not going to waste our time on looking at too much on the overnight, but I will scroll through. If it just pops out at me, I'll grab it. I'll show it to you, but I'm not seeing anything here. All right, so the next day opens up here, Tuesday, 9:30, market opens up. And boom, off to the races. Again, first 15 minutes, first 20 minutes, 9:50 reversal, actually got a nice little pop. And then we had kind of a little drift here, a little drift down, a real tight trend line. We had a little bounce here on the tradometer on a 5-minute buy signal, which didn't nail the bottom here, but it did eventually move up off of that. And again, a couple short-term 1-minute sell signals there. And let's take a look at what we could see. Wasn't much going on yesterday. It was when we look at playbook activity. We actually have a flag here. If we start qualifying this trade as now that we have that salmon colored line up here, if we could hold that 80 line, right? We could hold that 80 line and get this rotation back under the 20 line. I think we use that. Keep on using that medium, experiment with the medium. I used the medium in the beginning of the, when I first started developing this years ago, I used it. So I've always kept the medium there, but it really comes down to that fast and the slow and where the price is compared to the 20-period moving average. So that 1245, we're right on the 20-period moving average. We have this rotation, 1245, right here it is. We're right off the 20. As long as you're not underneath the 50, we're right on the 20, horseshoes and hand grenades. And from that point on, we had a nice little pop up there, and then we had that divergence come in and led to a little pullback, which was a nice little channel. 2 o'clock, and the market continues. But this is another good example of that strong setup here. This is the setup we're paying attention to. And this is important because that the divergence worked great in a choppy market, but when we have a trending market, you can rely more on the flag setup, that fast rotation, the embedded above the 80, and holding the price level and pushing higher. It works, it works. We'll concentrate on more tomorrow. I definitely will focus on this a lot more tomorrow. Here we had a dual stochastic, a dual tradometer and a Rambot signal and a nice pullback, and then 3 o'clock, 3:15. We're not seeing any divergent signals, just basically the tradometer signals are giving us those signals, and the Rambot, which is great. And then again, the day ends, and then we overnight trade. We'll boogie on through this pretty fast until we get to 3 o'clock, and then the European markets open up, and you can actually start to see we had a trend down here. This is on Wednesday, right? And there we are. We opened up. And this is actually, I'm going out last week. I'm going out a week. I'm looking at this and I'm saying, this isn't today. This is going out on the 412. Remember, we're up 420, so I actually went back a lot. So we're really identifying a lot of this stuff here. Well, not to mention it. Anyway, it doesn't matter. We still have the divergences. Like I said, show me a divergence. I'll show you the move up. We have a nice little divergence, little pop, and then, we're concentrating on maybe on that bear flag as we stay embedded underneath that 20 line here, and we kind of rotate back up, and then boom, right back down, and we start to identify another channel. Another great divergence here. This is a really good one. This is a news-based divergence. It looks like 2 o'clock. There might have been some kind of, that was oil inventories, I believe. Well, no, that was 10:30. That might be of, I don't know, beige book or something. Something came out. Looks like there was a spike in volume, and it caused a nice divergence. And from that point on, we kind of just came down to this wedge pattern. But let's just fast forward now. Let's really fast forward all the way to today's market. And we start off today, and this is another good example of trend lines. It was actually 2 days we had a very similar setup. Yesterday, we had this downward 1, 2, 3 channel, 1, 2, 3. We broke down out of a bear flag. This is a textbook bear flag. We stayed underneath that 20. We rotated up here, and we dropped off. We came down to we put in a new trend line here. Once that started to develop, we had this actually 1, 2, 3 pivots. So we broke down through this, and we came back into it, and then we held it. And that was the important thing on this. Just the one thing I want to talk about is if you see a good channel, and the price comes down to that channel and eventually breaks down out of it, but we come back into it, that channel line, that lower trend line, continues to hold. It's the integrity of the line continues to stand strong, and we tend to trade off of it again. Anyway, it did push back higher. Here we have, look at this, textbook. This is textbook. Stochastic, slow stochastic, medium stochastic, and look at that fast rotation here. This fast rotation is so beautiful that is, it should be in the centerfold of the May edition of Triple Stochastics. But great setup right there. So that's how important that setup is. So we have Tradeometer, we have Rambot, we have Triple Stochastic flag setups, bullish and bearish. We got some pattern setups, and all these represent the playbook, and that's what you should be picking from, because we know that, hey, this is easy to identify. This is easy to identify. The Rambots and the divergences are already there for you. Trend lines I put up there are so a lot of this stuff is taken care of. This is the foundation of a good method. Now the other stuff is just treating it like a business and getting organized and doing whatever it does to get your head straight in trading. Here we have today, 4:19. We start off the morning. To tell you the truth, the tradeometer was just killer today. It was unstoppable. Hey, maxed out. Unstoppable. I mean, buy signal, sell signal. Buy signal plus a Rambot, sell signal, buy signal. Even when we kind of broke down here a little, we came back pretty fast. And you might have even, someone might have even tried to pull this out as a divergence. I wouldn't have. I mean, this was a kind of a nice rotation at a triple stochastic rotation. All three stochastics. Well, not this one, not the slow. So I take that back. But as you can see, look at that. Look at the tradeometer today. I mean, that's ridiculous. Buy signal went up, sell signal, buy signal. There was no sell signal or a short signal. Buy signal, nice grind up. Another nice, it just nailed all the dips as far as I followed it. And then, of course, the market is closed now, and this is where we are right now. So, just an update you. The futures look like they are up a little here. We're going to be here with you most of the evening. When I'm going to get this out to you, send this video out, and then I'm going to run and get my sushi, bring it back here, and set up for the show. We're going to kick off cocktails and candlesticks at around 8:30 today. A couple stocks, just to let you have a couple stocks going into tomorrow. the let's see here. Let's see here. What do I want? I want to bring this up here. All right, let's just go over a few of these. Palo Alto Networks, PANW, is going to be on the list. All right, let's actually start with the one we took off today. Advanced Auto Parts did not work. It was not working out. We got a gap up, a little thing. We got some of the money back, but I took it off at a loss. I didn't feel comfortable with it. We were waiting for a big candle to really add to it. We have the candle today. It's coiled up. It actually can continue to move higher for tomorrow. I mean, we did have the volume. We did have a decent gap up. I think there was some good news coming across Europe on the automakers. I don't know if that just trickled into the auto parts. But you can see why we're looking at it. We're waiting for a candle. We never got the candle. I think our money could be put somewhere else better. Palo Alto Networks is starting to set up as a running divergence. Usually after series of three lower lows and higher highs, then we start to rip higher. So we're actually approaching that. I think we're actually going to start to turn back up. Maybe we wait for this thing to drop down underneath the recent low and then give us a real pure divergence. I get back into it. Here's a divergence back here. Here's the move. Here's probably a divergence back here. No, not really. That lower was low. But when we get them, we get them, you know. So this looks like a possibility. I wouldn't jump the gun on this, but this is one that I'm having the crosshairs right now. Sienna, when I've been banging the table on, this is good. Even though pull back here today, I still like the pullback here. Not, the price here looks really nice. I mean, take a look at the big picture here. So that's pretty boring, but there's another great thing about this, the weekly time frame. We haven't done any weekly scans lately, but when we see that weekly really lining up here, you see that weekly just getting oversold. When that market here tends to rally long and hard, we tend to have the weekly on your side. So there is some very positive, developments here with the weekly setup here. Very nice. So we go back here to the daily. We're long that. CWST, this is a waste management company. Freaking awesome consolidation, Looks great. Again, look at the big picture. This is more of an investment type of trade, but it recently just came out of a nice flag. This is a little bit opposite because the weekly is extended here. But because it's $14, I think, you have to look at this as a potential long-term swing. A nice little consolidation, trying to pop. We've been in this one before, just not. We actually got in here, but we got out of it on the pop. Back over here, and then it popped actually here, and then it's been going sideways. I was waiting for it, just waiting for it to pull back. It's not pulling back too much. It's probably going to leave without me. Palo Alto Networks looking good. ATSG, a couple cheap ones tonight. Just want to point out this one. They have a deal with Amazon. Amazon using their services for, their hub for service delivery of their packages and stuff. You can't go wrong there, right? I mean, that's just do the math. And I think they want to do a big, increase their partnership. There's a lot of other ones out there, but I don't want to make this video too long, and we always update you on Friday, so we're going to have another video coming out here, I think Friday, to be the members' HPS setups, which are still active. Do I have to show you anything on that? Let me just double check my chart. I want to keep that for the members because a lot of those are still active right now. Trip, APD, Under Armour, NIB. All right, so everything is just still active, so I'm not going to even show those. Hey, good morning. Good evening, Ryan. So that's it on that. I'm going to send this out to everyone out there, and I'll see you in the markets. And I'm not getting off the air right now. I'm going to continue to stay here, but I just want to get this out here. Let me stop this. And again, the one last to plug here, DayTraderRadio.com, broadcasting the markets every day from 8 o'clock to 11 o'clock tonight. God help me.